Hello, everyone. Good morning. I'm April Chadwick,
And I'm Diane Gertis.
and welcome to TMA Corner. And in case you guys didn't know, we're in Phoenix. Go Suns. That's hence the orange, but I keep losing my bun. Oh well. But anyway, go Suns. Yay! Today is a game. They're in the playoffs. So those of you that don't know, so we got to rally the valley. Reminds me, I hate to use my age, but it just reminds me of the 90s. That's what I'll say. Last time that it was like this, right?
That's
But
correct.
so, how are things with you, Diane?
Well, I'm in London. So, it's always, there's always, every day is a good day. How wonderful it is to be living in Arizona. And I get to work with great clients and wonderful agents. So, no, it's great. We challenges though, and there are always challenges in the market. And I would like to use April's word on this, we always have to pivot. And so, my goodness, we've done a lot of pivoting over the past year and a half. So,
Well, I did get it from friends, so let's
all
not.
friends, yeah, with the couch.
But we do have to pivot.
Pivot.
And another thing too, talking about lending in Arizona, we have to give a shout out to the rest of the nation. I guess that's finally figuring out what it's like to live in Arizona. Except we have AC and misters and all of that kind of stuff.
Yeah, it's we're used to it, and they're not. And I guess a lot of the I know as far as infrastructure and our roads, we've had to experiment through the years on what works on with hot pavement. But even in, I think it was 1990, 1991, please, I don't remember the exact year when we got to like 123 and they had to close Sky Harbor Airport because it was so hot. So we've had our share of really hot temperatures. And last year we had more temperatures in triple digits. I think it was like 55 days again. I don't know the exact day in a row than we've ever had, although we never got to the extreme heat like they're experiencing in the Northwest without air conditioning.
I can't imagine.
I can either because we go from air conditioned car to air conditioned house, uh, air conditioned
Misters,
doors.
everything's at
Yeah,
misters.
and kids can still play outside in the evenings, although some of the evenings when it gets extremely hot or even too warm. But so it's but all I have to say is all we have to do is tick tock. How long is it till the 1st of October? Woohoo! And
Hey,
that's when, yay! And even in September, we start having good days. So,
hey, and just let you know, we're closer to Christmas. So just to let you know, June 25th, we're less than 6 months away to Christmas. So
oh
that's
no.
just something to think about over here.
I used to be excited about Christmas, not so much. So anyway,
That's
no, I'm
fair.
excited about Christmas. Yeah.
I'll hold it for you. No,
Yeah.
just kidding.
Uh,
Go ahead.
No, I've been today in all my blogs that I was reading. Looks like the housing market is uh, slowing a bit. I don't know if it's because we're approaching the July 4th holiday because tomorrow will be July 1st. And, and maybe you'd like to go over this a little bit. I guess there's not as many offers on homes now.
Yeah, I think that one of the things that they've been seeing, and we've been trying to forecast and say, and I don't know if there's so many factors that they say if they're timid, if they're like what say, offer PTSD. They've been putting in offers and beating out. So they don't know if that's the reason, if it's just a mixture of that, of summer, it being summer, of also it being the July 4th weekend, but also we're coming out of a pandemic. And I always keep using the term that we're going for the roaring 20s again. But a lot of people, I think, are really ready to get out of town for a little bit. So that's what they're thinking, because we definitely haven't had a surplus of homes available. So I did check that. None were, as I said, airdropped in or anything. So I think it's just a mixture of both because rates are still great, right?
Still really good. Yes.
Yeah.
And the appraisals are taking longer. There is a column that I get called Rob Chrisman, and I've been reading other blogs, but it's not something I can forward to agents to let them know, what do you mean it's taking 2 weeks to get an appraisal? And well, part of it is that there is a shortage of appraisers. I don't know if they got burned out last year during the pandemic when there were so many refis and so many or a lot of them decided they didn't want to go into homes during COVID, and so they changed careers. I mean, we're just talking here. And of course, since they changed the home valuation code of conduct, I guess, has that been 10 years ago? Appraisers aren't paid that much. I mean, they get like $300 or $350 a house. So maybe they've decided that's not worth it anymore. Or the other piece of it is it's taking longer to construct an appraisal because of the lack of comps. So we have all these things that are taking longer for an appraisal. So and they're saying that if nationwide, the average time was 15 days before, and now it's just who knows. So I thought that was interesting, that I do try to educate agents and my clients if they are taking longer, and I get a lot of pushback, but I thought that was interesting.
Well, I think that's a really good point too, though. Like maybe one thing that, is not taking into account that it's got to be a lot harder for appraisers too. Oh, okay, there's this 2,000 square foot home that hasn't been updated in forever, and it's going for 650,000. And then the next comp is 590, and then all of these appreciation factors. I'm sure that's another thing. It's a little bit more difficult to do an appraisal than it used to be.
Yep. And then again, they don't want to two things the appraiser doesn't want it to have happen: kickback from appraisal management, which they will kick it back if they think that there are some inconsistencies in the appraisal. And the worst is if it gets to underwriting and the underwriter kicks it back. Because even though we get the appraisal in and we're all doing, well, the appraisal in, it still has to go to underwriting, and the underwriter has the final say on whether they accept it. And they could ask for additional comps. They could adapt for, and again, if they see something they don't like. So just as a sidebar, people should wait to do this happy dance till it gets through underwriting.
People should wait to do the happy dance until it's recorded.
Yeah, that is true. That is true. Speaking of appraisals, what made me think about doing a podcast over private mortgage insurance, which private mortgage insurance is the appraisals. That's what made me think of it. But the private mortgage insurance, PMI, is used for conforming loan amounts below 548, 200, and jumbo loans. Private mortgage insurance can be put on both if you put less than 20% down. The private mortgage insurance is determined by the amount of the down payment and the credit score. So those two things combined are what reflect in the private mortgage insurance monthly amount. And I'm going to talk about agency loans like Fannie Mae and Freddie Mac and jumbo loans. Those rates have come down dramatically over the past 24 months if you have good credit. So, and it's not something to be afraid of. So if you put 5% down, there's one rate. But if you put 15% down, it goes in increments of 5%, 5%, 10%, 15%. All of those rates are reduced at those increments. And if you have great credit, it could be minimal. It is a great way to minimize your investment on a house. I've had so many people say, oh, I'm scared of PMI. I don't want PMI. No, I mean, it makes sense to put if you need to go into a home. We were talking earlier about how some of the houses coming on the market now are, how should I put it? Trash. I mean, they just are, but people are buying them because they're going to go in and redo them. But if you need to hold out some money for either repairs or maybe just furniture, or you just want the aesthetics of the house to be different, that's a great way to do that by putting less money down and having PMI. PMI is not permanent. It is not permanent. It depends on the lender. But rule of thumb is that if you make 24 months of payments and your house is appreciated, you can get it removed.
Even without, just by how would you do that?
You would call the lender and call their servicing department, let them know that your house is appreciated. First, I'd call the realtor, your realtor, say, hey, what is my house worth now? And they can tell you, as long as it's less than 78% loan to value, then you should be able, depending on the guidelines of that lender, they will order, you'll have to order an appraisal. The lender will order the appraisal. You cannot, the lender will. You get to pay for it, woo. And if it does reflect that you have less than 78% loan to value, they will remove, per law, the private mortgage insurance. But keep in mind, every bank is different, so you would need to call your bank. But that is the rule of thumb for private mortgage insurance and how it can be removed. Now, if you have a FHA loan and you have mortgage insurance, that's on forever. Forever. So it, not only on FHA, you have upfront mortgage insurance, you also have monthly insurance. So it's always most people who start with an FHA loan flip it to a conventional loan as soon as their credit or whatever its situation was that they decided to go with an FHA loan, as long as that's behind them. And we've done a lot of those.
Well, I can imagine too, with appreciation and if whatever reasoning for you to get into an FHA loan, if your situation has bettered or matured, if you will, that's a great option to be able to refinance into a conventional loan.
The other is that on what made me think about it is that I had one of my best clients. Hey, Nick, if you're watching, he reached out to me on this, and he refinanced in December. And at that time he had like an 88% loan to value because the appraisal was required. Now there should be it should be at least 75%, just as much as the houses appreciated. But I told him to call the servicer on the bank and let them make that determination. But typically you have to keep that loan 2 years. So, and if you have a VA loan, there is no mortgage insurance. You do have an upfront funding fee. People have called and said, I want my funding fee back. I'm now, yeah, I'm now disabled, so I shouldn't have to have it. Well, that is not a decision I can make. Rule of thumb on that is if you were eligible for VA and it stated that you had to pay a funding fee, you can't get that money back. So just saying.
That's good to know.
You can't, I mean, your VA funding fee, but yeah. So you can call me if you want. I love talking to my clients, but if you pay for a funding fee up front, now you're disabled, VA is not going to give that back to you. Typically, but you could call VA and ask. I mean, doesn't hurt to ask, but that's not something that I can take care of.
No, that's good to know. And then I think it's also good to know though too, that with VA, a lot of times that they don't even pay the funding fee because, can't the seller pay the funding fee at times as well?
Sure, seller can pay it. You can also ask for get a higher interest rate and pay both the VA funding fee and closing costs if you want. So all of that can be absorbed in a different way as well, depending on the amount of it.
And then what I think is great too is that people now know that they can, when they're not only pre-qualing, but also a great thing to ask you, it would be, hey, here I'm going to have mortgage insurance. What do I need to do to drop the rate of the mortgage insurance? Is that an option too? Like, hey,
sure, yes, absolutely. That's a great question. By the way, it sounds like there's a garbage disposal going on in the background. Is that
my landscapers just decided to come, so I'm muting.
Okay, really? Okay, I was like,
that's why I'm being like very quick to the point. My landscapers decided to show up, so please continue.
Okay. Well, two things will help reduce. One is putting more money down. The other is there's a couple of different ways. I don't want to confuse the issue. Putting more money down. Let's work on getting your credit rating increased. That'll help. The other is you can pay your mortgage insurance up front instead of paying it monthly. There is an option to do that, and ask about it, look at it. Don't see that very often, if at all. Oh, no, I have seen it. I didn't know, we do see it, but that may not make sense, especially if you have good credit. And especially since the market has increasing as quickly as it is. It's appreciating.
Oh, appreciating.
Yeah, may not, but that's your decision. We can certainly go over both and see what that looks like.
Fantastic. Any other things you can think of on mortgage insurance?
No,
Or
but don't be afraid of it. I think it's a great way to buy a house. Don't be afraid to put 3%. If you're doing agent, Fannie Mae or Freddie Mac, a conforming loan limit, that you can go as low as 3%, go 5%, 10%, 15%. Don't be afraid of it, because might be surprised at how little it'll cost you to do that over the long run, especially if you're trying to retain funds for repairs or, backyard, pool, a better ambiance in the house.
well, and that's great too. Like if you're saying you're going to be in your home for a while, there's always options. You get into it, and then if the appreciation or anything else, it's always an option to call your lender to see if what your MI is at, what you can do to drop it or reduce it, or as well as your interest rate too.
I have a client that I'm doing a loan on now. Get this, I did their loan a year ago, did 10% down. They called me because they're going over options. I looked at it. We actually were able to turn around and refinance it, doing a cash out refi with $40,000.
Wow.
And we didn't need an appraisal. The National Underwriting System, or AUS, took the appraised value that a lot of times I go on the automated systems and and that one worked, and they did not ask for an appraisal. So not only is she eliminating her MI, now her new payment, taking 40,000 out with a lesser credit, with a lesser interest rate, is less than it was. So just to let you know.
It's always good to ask. Always good to ask. And that's why
just ask. All you can say is no.
And that's what you say. You're like, hello, no.
Yeah. That's it. Oh, maybe let's look at options. Let's see. There's always options.
So, well, I think that's great. And that's why everyone has you, and that's why you're the best.
Some days I try. All I do, I can honestly say I try every day. Well, most days I try. But anyway, but it's going to be kind of cool. 4th of July is going to be on Sunday, and I can't believe it. The year's halfway over. So
awesome. And we're going through it, and everybody's healthy and happy, and we're just moving on right along. So
moving on. We're pivoting as we go. Right here. So.
And if anyone has any questions, and please call Diane. Hopefully, I think this of all of ours, not that all of our podcasts don't have amazing info, but this definitely should be something that a lot of people think of and go, maybe I need to call on that. So please call Diane. She's the best. And what's your number, Diane?
480-235-5667. Is it in my phone? Because if it's not my phone, I don't even know what the number is. 480-235-5667. Available all weekend. I hope everyone has a wonderful 4th, and everybody stay safe and, of course, cool. And go Suns.
And go Suns. And me and my landscapers, thank you guys for tuning in today. The one time I have to speak, they're right by the window. So I will give a shout out to my landscapers. They're awesome. And please follow us on Instagram. We really appreciate you guys tuning into this. Also, you can call me or reach me anytime. I'm April Chadwick at 602-740-5319. And I will next time give out my landscapers number in case you need them. And go Suns! Woohoo!
Go. Bye.